Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news major write-downs are ahead for commercial property portfolios. But first, in China, they've started to withdraw the emergency monetary policies introduced to offset the impact of the coronavirus outbreak as their economy continues to recover. Given the stronger than expected economic rebound in the second quarter, and with concerns looming of creating excess debt and financial bubbles, the need for easy, cheap debt is easing there for now. But their rebound is still threatened by wild weather in July. They're bracing for torrential downpours and hurricane-force winds across large parts of their country in the coming week, and 93 major rivers are still above emergency warning levels. Not every Asian country is recovering well, however. For example, Thailand has suffered a massive fall in trade in June, with imports down 18% year on year and exports down 23% on the same basis, amid a worse result than in May. And Singapore's rebound is disappointing, with industrial production in June not showing the gains analysts were expecting. Early indications of factory and service sector activity in many major economies were released over the weekend. American firms showed a stabilisation of business activity in the start of their third quarter, with a contraction in the service sector output slowing and manufacturing signalling a modest upturn in production. But the rate of decline of new orders gathered steam. And a feature of this report for the US is a rise of inflation in both input and output prices. The combination of the pandemic and the trade tensions seems to be working to make American goods less competitive, and quite quickly. In Australia, the easing of lockdowns prior to the latest reimposition saw a very strong rebound in economic activity, but events may have overshadowed this impressive result. And Australian companies are reporting earnings down 20% in this cycle. Part of this is because CBD office towers are going to end up needing to be revalued sharply lower. Citibank analysts said by 15% when they reported in June. Goldman Sachs' July report says by 30%. The Sydney CBD now has 194,000 square metres excess capacity, and Melbourne had 75,000, and that was before the latest lockdown. Commercial property, especially retail and office, are going to suffer massively, and property fund portfolios will take a major hit. The US Treasury 10-year yield was little changed at just under 0.59% and still near its 3-month low. The gold price is at a record closing high of $1,901 an ounce. And oil prices are unchanged today. They're just above $41 a barrel in the US, and the international price is just above $43 a barrel. And the Kiwi dollar will start today marginally firm at 66.5 US cents. Against the Australian dollar, we're also firmish at 93.6 Australian cents, and against the euro, we're unchanged at 57 euro cents. That means our trade-weighted index is 70.1 and still in the range it has found itself over the past 2 months. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.